Hey traders, welcome to video 11 of the Forex Beginners course. This is Corey Mitchell. In this video we are looking at monitoring your trading statistics, brought to you by Investo.com. So trading requires more than just hammering keys and jumping in and out of positions. You need to monitor your performance so you can see what you do well and what needs work. While there are many statistics you can track, these three are the bare minimum. So the first one we're going to look at is your win percentage. This is how many trades you win out of your total number of trades, typically over a period of time. So I'd calculate it at minimum over a monthly period. You may also want to track it on a weekly basis, but monthly for sure. So if you make 100 trades in a month, 63 of them were winners. That means your win rate is 63 divided by your total number of trades, which is 100. That gives you 63%. If day trading, you can track it daily, you can track it weekly, you can track it monthly. This will allow you to potentially see market environments you should avoid, or market environments that you do very well in. For example, you may see that your win percentage is extremely low on Mondays or on Fridays, for example, when volatility is typically a little lower. So you may opt to be more selective on trades on those days, or avoid trading them altogether. If you're losing every single Monday you trade, don't bother trading it. Just trade the other days. You're actually going to make more money by avoiding that one day or a certain time of day. So the next one that we want to look at is the win-loss ratio. This shows you how much bigger your winners are than your losers. You can have a very high win percentage, but if your losers are big compared to your winners, you could still be a losing trader. So you could win 90% of your trades, but if you only make 1 pip on your winners and lose 10 pips on your one loser, you actually lost money. You've made 9 pips on the winners and you've lost 10 on the one loser. So you're actually down money. So the average, how we calculate this is simply your average win divided by your average loss equals your profit factor. Ideally, this should be a percentage. So what we want to do is, let's say you make 3 trades today. You have a 5% winner, a 7% winner. So the average of those two, you add them up, divide by 2. That gives you an average of 6% that you made on your trade. That's a huge gain, but let's just pretend. And your average loss, let's say you had one losing trade where you lost 2% of your account. So you take 6 divided by 2 and you have a profit factor of 3. So you made 3 times as much on average on your winners than you did on your losers. So basically you're adding up your wins for the day, or if you want to do it over the week, you add up your wins over the week, or if you want to do it by month, you'd add up all your wins over the month, percentage preferably, and divide it by the number of winning trades. Add up your number of losses over the day, over the week, over the month, and then divide it by your number of losing trades. And you plug them into this formula to get your profit factor. That number should be at minimum above 1. If it's 1, that means your average win was the same as your average loss. So if you made 10% but you also lost 10%, that means your profit factor would be 1. So basically your winners and losers are the same. That is okay, but you're going to need a high win percentage to make money. If ideally you want to be above 1, if we look to the profit targets I discussed in video 10, you are going to have a profit factor of at least 1.6, or a win-loss ratio of at least 1.6, because your winners are always at least 1.6 times your risk. So if you're risking 1 pip on a trade, you're making 1.6, or if you're risking 10 pips, you're making 16 pips on the winner. So basically, my average win-loss ratio should never be below 1.6 as long as I stick to that strategy. And it's typically going to be higher because I'm also getting out some of my position at 2.6, 3.6 times my risk. So my winners are always going to be bigger than my losers. It may not be exactly 1.6, even though that's what I put out, because occasionally on an order you'll have a little bit of slippage, so you might make a little bit more on one trade, you might make a little bit less on another just due to where the trade executes. But mine is going to be above 1.6 or higher, typically around 2.5 or so. And that's a good win-loss ratio. At 1, as I mentioned, you're going to need to have a high win percentage. If you're below 1, you're going to have a very high win percentage in order to be profitable. If your win-loss ratio is very high, so let's say you have a 3 to 1 or 4 to 1 ratio, so this ends up being a 4 or 5, then your win ratio doesn't have to be quite as high. Another one you want to look at is just simply your profit percentage. This is the percentage profit on your account capital, typically calculated over the course of a month. The percentage reveals more than just a dollar amount. I could say, oh, I made $10,000 this month, and that sounds like, oh, great, you made a great return. But until you actually know what account value that was traded on. So if you make $10,000 on a $2 million account, that's okay. That's a 0.5% return for the month. Not very good for an active trader. That means you're making about 6% a year, which you're not going to be able to make a living off of, so not ideal. But if you make that $10,000 on a $100,000 account, that's a 10% return for the month, which is much more respectable. So by knowing these stats, you can catch others who are trying to mislead you. So lots of internet ads will try to sell you signal services, books, all sorts of things based on some stats that they try to cloak in some mystery. But you can use these stats just to kind of ask yourself some questions about what they're offering. You can also ask yourself these questions yourself to try to catch yourself when you're trying to deceive yourself. You may, for instance, tell yourself, I'm a great trader, I have a very high win rate, but if you're actually losing money at the end of the month, you're not a good trader. You got to look at these statistics, and they kind of give you a baseline for how you should be judging your performance and also ways to improve it, which we'll get to in a moment. So let's look at some of the ways you may mislead yourself or that others may mislead you. The company may quote their dollar return but not the percentage. So for instance, you may see a banner that says I make $2,500 a day, but on what amount of capital? If you're trading $1 million, $2,500 a day is not, it's okay, you're making 0.5%, but it's not extraordinary. But if you're making $2,500 on a $100,000 account, that's a pretty good day, you're making 2.5%. If you're trading a $50,000 account, that's a huge day, you're making 5%. It doesn't take long to rack up some capital making 5% a day. So it's very subjective to what the amount of capital is, which the percentage at least lets you know. It doesn't let you know that they're trading this amount of capital, but it does let you know how they are utilizing that capital. Are they utilizing it well? Are they making 1% a day, 2% a day, 10% a month, 20% a month? It gives you more information than just saying, I make $2,500 a day, I make $100 a day, I make $10,000 a month. So a high return begs the question, if you make this $2,500 a day, let's say, and it actually is a good return, let's say he's trading a $50,000 account, so he made 5% on this day, you need to ask the question, all right, you said you made $2,500 on this day, that's a 5% return. You also have to question, what are the bad days? If you make $2,500 on a good day, hopefully your bad day is less than that, or slightly less than that, or about the same. If you have a high win rate, you can make $2,500 a day most days and lose a little bit more on a bad day. That's fine, because if you make $2,500 on 4 days and lose $3,000 on the 5th, that's fine. You're still going to be making money. But if you make $2,500 4 days out of the week and then lose $20,000 on the 5th day, you're in deep trouble. So you need to ask yourself, what are the bad days? High percentages, you'll also see this very often. Someone will say, I win 95% of my trades. But always remember, if you can win 95% of your trades and make 1 pip on 95 trades, but on those other 5 trades you lose 100 pips, and you're going to get killed. So always remember, if your losses are way bigger than your profits, it doesn't really matter what your win percentage is, you're probably going to lose money. And a lot of profits, some guys will take profits for 1 or 2 pips, but you can, on your losing trade, end up taking a huge loss. So don't always just accept this win rate as something that you can rely on. You also have to put it in the context of the win-loss ratio. So if your gains are bigger than your losses and you make 90% of your trades, you are phenomenal. All three ratios should work in harmony. Your monthly profit percentage tells you the story, like what the basic story, whether you're profitable for that month. But your win-loss and win percentage can actually help you isolate where you're having potential issues. So one example would be if you have a high win rate, but you're still losing money, the problem is likely in your win-loss ratio. So if your losses are bigger than your profits, you have two options. You need to reduce the amount that you lose on each trade, or you need to let your profits run longer. So as I mentioned in the last video, I just use if I'm risking 10 pips, my profit's always 16. That way I know my profits are always bigger than my losses, and I know that my risk is defined. Letting profits run or cutting losses isn't an arbitrary decision you make on each trade or while in a trade. You need to strategize, create a plan. How are you going to do this? So whether it's my method of the 1.6 times risk, so if you're risking 10 pips you make 16 on your profit target. Whatever that is, you got to strategize it out, write it down, create a plan, and then stick to it. We're going to look at creating a trading plan in a couple of videos. But this is the process you want to start, is thinking, how can I actually fix these ratios? Don't just go into a trade and then make all sorts of changes within that. Instead, strategize, think about it before, and then do it for every single one of your trades. So let's just quickly go back. Let's look at these again. So these are the ones you want to look at. Your win percentage, how many trades you're winning out of your total number, generally over a month, a week, or a day. Your win-loss ratio, so take your average win percent divided by your average loss percent, gives you a profit factor that should be at least greater than 1. And your profit percentage is your monthly profit, or typically your monthly profit on your account capital. So you would just add up how much you made divided by your account capital to give you a percentage return for the month. Ideally, we want that to be positive. Be aware of people who are trying to deceive you based on these stats by only giving you part of the picture. Also be aware when you try to deceive yourself by saying, I made 2,500 bucks today, I'm awesome, but the next day you lose 10,000. That is not a good win-loss ratio and is probably going to lead to your account being decimated. So keep these in mind and think about strategizing how you can improve these ratios to improve your overall monthly profit. Until next time, happy trading.